actually not the preview, but we're going through together the release of NFP, watching, actually monitoring how the markets react, and more precisely how dollar and the US indices will react, and so on and so forth, as we do every single month. This is the most important data release of the whole month, all right? So, and today's one is quite it's a bit unique, especially after yesterday's release and the ADP, the strong ADP, and the decline on the jobless claims. So we have seen since yesterday a lot of wait and see reaction, mixed stock markets overall, because yesterday's ADP number actually boosted the NFP odds for today. So it was a quite strong report that has actually is putting some pressure to the upside for the NFP number today, even though it's already high. So pretty much the average forecast is around 664,000 jobs today. However, if I share with you, not sure whether I can do that, some of the expectations from several research houses, we have a big variance. I mean, the minimum, if I'm not mistaken, the minimum reading starts from 400,000, and the maximum is up to 1 million jobs. So this is the range that the forecasts are for the time being. So what we have seen so far, I will share also my MT4. Just give me window. Here we are. Okay, can see that we have 54 people here. I'm glad. If that's good, if that's indeed reliable. So yeah, okay, Stuart just let me know. It was 71. Okay, that's good. That's good. A lot of people are interested on finding how we could, what we should say ahead of the NFP and after the NFP number. So just a quick briefing, okay, where we're standing, how the stock markets, where the major US indices perform, and the dollar more precisely. I have the S&P 500 over here, and the reason why I have put S&P 500 is because we have seen an overall mixed performance so far from the US futures, but in general, equities were quite quiet ahead of the NFP today. So the reason for that, it is, as I mentioned, the yesterday's jump on ADP, but on the backside we have also the worries that and in regards to tapering from the Fed. Okay, so pretty much what we have seen so far is investors or market participants, if you prefer, being affected, okay, by any discussion, any comments, any concerns that the jobs report, in general, the U.S. labor market might push Fed on tapering easy money policies in the coming quarters. Anyway, we had a lot of Fed speeches over the week, and recently, actually not this week solely, but we have seen a lot of Fed officials, policymakers as well, stating that the labor market is a key point for taking any decisions. That's why today's NFP is even more important than what is usually is, because it's one of the focal point that Fed is looking. So it will determine pretty much whether the economy needs further support or not. It will determine whether they need to proceed in a tapering or not, whether they will follow other major central banks as well. So a strong jobs report today is good because it will sustain more pressure inflation because actually uh, um, because, so yeah, as I was saying, a good number today, it could confirm once again. It could actually, first of all, we haven't seen jobs reports so far since the pandemic started being stable. So we didn't have either a continuous rise or even a continuous decline. It was like it wasn't stable. So today's reading could actually increase the odds that labor market is rising, is well supported, and it will actually increase the odds, as I said, for the Fed to start. To thinking about the tapering at least, or even proceed sooner than what was initially expected. Yeah, without a strong jobs report today, that's pretty much not a choice. But ADP is a very good indicator for NFP, so it's expected to we are expecting today a very strong NFP number. So because I'm speaking a lot without showing you anything, let's move on and see S&P 100 first and then the dollar. So we're 3 minutes before the data out. As you can see, the indices, the US indices, major indices, are consolidating since yesterday. Let's shift to dollar as well. Okay, I can see a lot of questions, guys. I will reply to all those questions, but I would like first to have the release out, because it's NFP is a very volatile release, so it's good to wait a bit until the data are out. So where's my dollar index? Yeah, here it is. So dollar index edge higher since yesterday, actually since the 1st of June. But yesterday we had a sharp rally as well. So that was, of course, on the US Open. I'm sure that you you have seen this move yesterday on the US Open and the release of the data. So it edged out at 3-week high. So if I zoom out, the territory that has been held since yesterday is 3-week high area. So if I bring quickly the weekly chart, okay, you can see that it recovered some of the gains that we have seen the whole May after it dipped into below the 91 territory. So back to 90.49, 90.50 right now, actually. So we have this. It was more than a 1% rally yesterday. Okay, so that strength on dollar, of course, came on the ADP and on the pricing in of a very of a more optimistic outlook around the U.S. economy, and actually this big rebound on dollar, okay, it's not in general something new. If I just give me just a second. So this jump that we have seen since yesterday actually, it is one of the biggest that we have seen the last 2 months, as the dollar was extending lower, and it had this bearish it entered this bearish move since March last year. But yeah, so that was one of the biggest rebounds since then. It wasn't solely so data. Okay, thank you, Stuart. So data is a mist. Oh God, let me share you so the data, so you're with me. I didn't manage to mention to state it to mention everything that I wanted, but it's data time, so it's important to show you the data instead. Yep. So let me refresh. So USA US May unemployment rate at 5.8%. Payrolls missed nearly 100,000. Is that the case here?
Yes, 569.
Yeah, 559. So 559,000 from the 650,000 expected, right? Okay, and actually it revised higher. That's it revised higher from the 266,000, but it missed expectations. Average hourly earnings were positive, actually increased at 0.5% from the 0.2% expected, decline from the previous month. However, unemployment ticked lower, 5.8%, below what was expected, below last month's reading. So it's okay. I will say it's a positive overall report because unemployment decline, but also hourly earnings increase in a monthly basis and in a yearly basis. So that's good. We have 3 out of 4 important releases today being positive, but we have quite a big miss on the actual payrolls number. Okay, so that's nearly 100,000 missed. So we overestimated apparently the NFP report today, but nonetheless, we just be a bit realistic and see the overall picture of this report today. It's a good report overall. Okay, especially the fact that unemployment is low and the hourly earnings have increased. So let's go back to the dollar index. Okay, in the 15 minutes chart, most precisely, we have a big dip. So, okay, share. Sorry, you cannot see me properly over here. Okay, stay. Okay, big dip. I will remove the caption as well, just to show you, just to see your questions. Perfect. So, big dip. So, as I was telling you, anyway, because of yesterday's data, we had a lot of pricing apparently for a very strong NFP today. So now the fact that the NFP missed expectations has caused a lot of selling pressure. This is what we're seeing right now, is the immediate response of the market before actually realizing that overall this report is more of a less positive rather than negative. So this yesterday, more precisely, I shouldn't discuss a lot about yesterday's data. But this is what actually is going on over here. We've seen a boost initially of the dollar on the good ISM data, on the strong ADP data, on the lowest print of initial jobless claims since the pandemic started. So all these boosted dollar higher, because also this rekindled the Fed tapering debate, as I already mentioned. We have this boost, but once we have the release out, we've seen dollar entering plummeting lower because of the mist. So we need to wait a bit for the markets to calm down. As I said, it's an overall good report. So let me keep an eye on the breakout of if we have it. Let me double check whether we have actually breakdown of the report. In the meantime, we also have, at the same time, we had the Canadian labor data, which I didn't show you, also missing expectations, dipping actually. So we have a contraction on the employment change for May, 68,000. Average hourly wages slightly better than last month, but still contracted at 1.4%. Unemployment rate, unfortunately, slightly higher than last month and in line with expectations at 8.2%. Positive US report, but kind of a neutral to negative Canadian report, apparently. Okay, so it would be interesting to see the dollar cat reaction. So 1 hour. So, okay, looks to be vice versa due to the dollar's immediate response. But yeah, as I keep saying, this is a good report for US. So we might see this decline being a bit limited or get limited after this noise on the data, after this dip on the data, this decline on the data. Um, okay, we're gonna discuss how this reading is affecting the Fed uh, later. I would like to see your questions first, I think. But yeah, you need to have in mind that um, that that in regards to actually let's discuss about the Fed after we are done with your questions. Is preferable, I think, as a summary of where we're standing at the end of the week and after the ADP. So impact, okay, as that's not a clear question, but I guess how the dollar will react on the NFP. As you can see, it dipped lower. This is a 15-minute chart, guys. I make that clear because this looks a bit big, which it is actually. We have a dip of around 40 points lower, yes, but this is a 15 minutes chart, okay. So we had initially declined because they missed estimates, but let's go to the 1 hour chart. We've seen that it reversed more than 50% of yesterday's rally. However, it remains at 30. It went back at 38.2 for the time being, 90 30. But you can see in the hourly indicators over here that there is, okay, we have mixed momentum over here. So the short term, the near term stochastics, which you can not obviously see. So let me, okay, here it is. You can see that even though it dipped it significantly, it didn't break the oversold territory, and instead it's like moving sideways and flattened. So indeed, there is some negative bias in the very, very short time frame due to the mist of expectations, but this might be limited. So it will be very, very important to see how this candle will close, because if it managed to actually sustain and move above the 90-30 territory, or if you prefer more precisely the 1920, which is the 50% Fibonacci level, is the midpoint of yesterday's rally. So if you manage to sustain and move above it, okay, then we might see this dip actually running out of steam soonish. This dip to be limited, but we need to wait for all this noise to to calm down a bit, the markets to calm down a bit after the data. Yeah, but as I said, it's not a good report. So if we go to the daily chart, okay. So we have seen, actually, let's move on to the 4 hour chart. We have seen the asset breaking, okay, retesting actually for the last 2 days, the 20-day moving average, but it managed to decisively break it yesterday. And you see how big this daily candle is in comparison with all the rest that we have seen the whole May. So a big, nearly full body candle breaking the 20-day moving average and actually closing well above the 20-day moving average and well above the resistance level at 90.40, the 3 weeks resistance level yesterday. So yesterday's strong data along with today's positive overall jobs report could support this overall this week's rebound of dollar. However, from a technical side, okay, from the technical perspective, okay, the 50, sorry, let me just put that on, okay, over here. The 90, 65, 90, 70 is a key resistance area for the asset because it's a confluence of 50-day moving average and the upper Bollinger Band area. Okay, so only break of that level could open the doors for the dollar up to April's 91 and 90, 50 zone. Okay, now despite this breakout, the asset, okay, you can see that overall the dollar, it was like it wasn't, it still is in a downward trajectory. So it hasn't really exited this downwards trend that we have seen since March. Okay, since March. Okay, the only thing that it has managed only to recover the 20% of this dip. So the next key resistance for the asset is the 90-60, which is the confluence of 50-day moving average and the upper Bollingers, in order to suggest further boost and a potential retest of 91 up to 91.50 resistance zones, which reflect to the 38.2 and the 50%, nearly 50% Fibonacci level. You can see that we're getting some positive vibes from momentum indicators, but they still are below 50. So we need confirmation for the upside. Okay, we need further confirmation for a move to the upside because MACD, okay, increased, that is moving closer to zero, but remains still below, and still remains into the negative territory. RSI managed to retest 50 zone, but remains like on very, very close, just a breath away the 50 zone. So it hasn't really break it, and it doesn't even point to the upwards. So yeah, the overall picture remains neutral. The daily picture remains neutral as long as we don't see a decisive breakout of the key levels that I have just mentioned. That was on dollar. Dears, hello, Dada Prasad. I'm glad that you're here. I'm glad that you're consistent and trying to learn things. So, yeah. So, hello everyone. Hello. Okay. Okay, that's different. Okay, I will come back to this question, Arjun. Okay, just let's finish with the data, and we're gonna discuss all the rest of the market related, all the other current affairs of the market later on. Let me finish with what the people are asking about. The reaction of the reaction after the data. So I will pin that. Okay, how do we see the NFP data will be? We have replied to that. Hello, Michael. How to make a positive trade? Okay. Hopefully you didn't have you weren't actually you didn't had a position open before the data, or if you had, I assume you had it with a proper risk management before, with your stop loss in an appropriate level, did your homework before entering or trading the NFP, my dear Emma? Hopefully you did that. Market will go crazy. That's the usual. It's a very, very volatile event. Bullish or bearish, I cannot really reply to that. What I can say, if you're asking about dollar, is that uh, it has dip, but in the intraday, in the 1 hour chart, it has dip on the midst of the data. But you can see that stochastic has held above the oversold territory, hasn't broke it yet. RSI is pointing lower, it's at 38, but it hasn't crossed 30 yet. So we have mixed momentum indicators intraday. So it's better to wait a bit to see the next few candles, at least in the 30-minute chart and 15-minute chart. But more or less, from fundamental side at least, this looks to this the data should put some floor on this dip, on the dip that we initially have. So yeah, if I need to say whether it's bullish or bearish, I will say that the jobs report, it should be bullish overall for the dollar. Um, so yeah, so key levels to be watching the 1 hour chart, since everyone is asking about dollar. Okay, key levels are, I already mentioned that, but it should be with a red line over here. I put with a red bold line. Yeah, it will be the 1910 territory, the 50% retracement level. This will be key, because if if it breaks, we might see further decline for dollar. Okay, this is a very messy chart. Let's move on. Hello, Norman. Welcome to the team. Welcome to the community, as you call it. Dollar CAD update. Yes, sure. So let's move on. Let me put the 30 minutes chart. We have a big dip. This is a 30-minute chart. Sorry, guys. 30 minutes chart. We have a big dip on the data. Canadian dollar, weakness on dollar actually caused this decline on dollar CAD, even though the Canadian job report missed expectations, and this should be the other way around. But let's see. But we had this dip at 120.86, which is actually a nice the resistance level of the week. Okay. Actually, if I put the reason why I have the 120.86 level is because, okay, if I zoom out, I want to see something. We have seen we have seen, no, you cannot really see it properly, but we have seen the last 2 weeks the dollar CAD consolidating in a range. Can you see that? How you see that is actually it was moving. It was actually bouncing between 120 to 121 30 40 area. Okay, it was bouncing. So the reason why I had already the 120.86 as a support level, as a key support level, it is because sorry, here it is. Is actually the mid. It's actually the 38% of the decline that we initially see back in the mid of May, and nonetheless, okay, this is 2 weeks range, but also a key. Let me show you that. Oops. That level is also our 20-day moving average, okay, which has broken yesterday. So that is why 120.86 is a key support area for the asset. Converted, it was resistance yesterday because the asset didn't manage to break it for since the 90th of April, but they managed to move above it and close above it yesterday. So 120.86 is the 20-day moving average and a key support level for the asset today. So it will be important to see whether the asset will close today, will close the week below that level. Okay. So a close below that level, okay, tonight, okay, it could suggest the return of the dollar CAD back to this more than a month range, but also it could um, it could actually increase the odds of a further decline for dollar CAD, because overall, okay, um, overall, the Canadian dollar has a lot of factors that support the Canadian dollar. It's the oil, which actually persists at 70 territory or close to 70 territory. So higher oil prices support the support the Canadian dollar. But also, if you check our latest Canadian reports, I had one earlier this morning and one on Wednesday as well. Canada, other than the oil prices, the high oil prices, the Canadian dollar is overall supported since the. Let me zoom out to show you a bit. So you've seen that the dollar CAD, the Canadian dollar, actually benefited since come on, zoom out, since last year, since the pandemic remains in a downwards trajectory. So overall, the Canadian dollar has experienced and is expected to continue experiencing an overall bullish momentum, not solely from the oil prices, but also along with the fact that they are in a good level in regards to vaccination. It's a country that actually vaccinated more than 50% of their population in 5 months, reaching to government goals, and and even though its vaccine rollout lacks in comparison with US and UK, but more or less factors that are supporting the Canadian dollar is oil and also the overall picture of the Canadian economy. So the Canadian economy is recovering as well, and is recovering fast. So we've seen rising housing investments. We have seen very favorable financing conditions. We have seen recovery in the jobs market overall, even though today this dismal report should have weighed on the dollar. But once the markets calm down, we might see that. So the midst of today's labor market, and the more precisely the fact that, where is it? The fact that we have a rising unemployment rate is something that could weigh on the Canadian dollar. But let's wait and see. So key support levels are 120.86 for the dollar CAD in this 1 hour chart. So a decline below that level, okay, could find the next support levels at 120.55 was the resistance, the floor over here. And the very next one is yesterday's bottom at 120.30. And the very next one is around 120, which is anyway the month's floor, the month's bottom. Okay, so The fast moving average in my 1 hour chart already crossed bearishly. Let's check the 30-minute chart. Yes, we have a dip. They keep extending lower. Bollinger's expanding lower, suggesting further decline. The fast stochastic is still pointing lower, and it hasn't crossed below 20 yet, so there is further steam, the further area to be covered downwards. So intraday picture, 30-minute chart, 1 hour chart remains bearish for dollar CAD, but keep an eye on the support level that just mentioned. In the daily picture, a close tonight below that level could open the doors to 1 month floor in the 120 territory. While if it managed to sustain a move within the upper Bollinger's area tonight, then the next key resistance level to be seen would be the, let me just zoom out of it. Okay, would be the one. Here it is. This the highs over here, 121.70, and back to the beginning of May, the 122 level. So this is the resistance zone if the asset managed to sustain today within the upper Bollinger Band area above the 120.80 level. That was on dollar CAD. So, okay, we've seen the 30-minute chart, we've seen the 1 hour chart. Let's move on. And guys, don't forget that for those that are interested in the overall in the long-term picture of dollar CAD, at least don't forget that um, that the massive global stimulus, okay, the vaccine progress, but more precisely, even more important, the fact that the Canadian dollar is an oil correlated asset. It remains, it's expected to remain the main driver of Canadian dollar. So as long as we have firmer commodity and oil prices, and as we continue to see global recovery continuing, and we have massive global stimulus, progress in vaccination, so on and so forth, then this should keep the Canadian dollar on a firmer footing. Okay, so that was on CAD. Where's the next? Gold. Yeah, sure. It's one of the most significant, one of the most interesting assets today. Everything is interesting actually, but yeah, gold has been seen having the worst week, its worst week since March, if I'm not, if I remember properly. So yeah, okay. So gold, let's start with the intraday picture, with what's going on right now, and I will flip to the 30 minutes chart. Big jump, yeah, on the after the data, breaking this consolidation, this range that we have seen the last since yesterday, actually, after the dip on the after the dip to from 19 territory down to 1860. So we have a recovery. How clearly presenting a firm dollar and affected by the strong economic readings that we have seen this week. but also uh, on the worries, or you prefer um, concerns whether there is whether we're gonna what actually hints we're gonna take from the report in regards to the Fed, to the monetary policy. But yeah, we had that dip, was the biggest. However, if I pull that out, we've seen so far the asset dipping lower. 1855 was the low of the day, so it extended yesterday's decline below the 20-day moving average, right? But after the data, will quickly recover some losses, and right now is standing at 1885. Okay, this is where we're standing right now. It crossed, this is the 1 hour chart, it crossed outside, like it actually broke and closed outside the Bollinger Bands. Moving average, fast moving average, the 5 and 9 are pointing further to the upside. MACD has seen some progress to the upside as well. RSI above 50. Stochastic, which you cannot see, I need to duplicate it again. Here it is. You can see that it has posted rising higher lows. Okay, you see that rising lows, rebounded and pointing to the upwards, and actually upside, and actually just crossed above 80. That is furthest into the upside, still pointing upwards. So that suggests that we still have some more bullish bias in the very, very short time frame, at least. Okay, and this is more than 50% of yesterday's decline, if I'm not mistaken. Yes, it is. So next key resistance level is the 1889. Okay, confluence of 200 period exponential moving average and 61.8 Fibonacci level, while a break of that level could open the doors to 1900s round number key level, key psychological level for gold. So yeah, give me a sec. So overall, however, guys, okay, we just, since we covered the resistance areas, the resistance level you keep an eye on in intraday. Immediate support remains at 1875. This continues highs that we're getting since yesterday. Confluence with the 38.2 Fibonacci level. This is the support level for the day, the immediate support level. But overall, we have seen gold actually in a stable upwards move since the mid of March. Okay, so it has it recovered some of the last quarters 2020 of 2020's last quarter declines, and it's in an upwards trajectory since then. That's why actually the fact that it extended losses today further below the 20-day moving average, okay, suggests that there is still a lot of selling pressure, okay, in the gold. So keep an eye tonight at the close whether the asset will manage to recover and to get back to the upper Bollinger, or whether it will fail to have a sustainable move, actually a strong move, a strong recovery after these week's losses. So if it remains shy of 1880 territory, okay, if it remains below that, then this suggests that there is still some selling pressure on gold, while more precisely a move back to the floor that we have seen today, the 1855, could open the doors down to 20-day moving average and the 1830 territory for the gold. Okay, yeah, but as long as it sustains at least at least close to the 20-day moving average and the 1880 level, then this will um, this will suggest that this was just a correction, and the strong uptrend that we have seen the last 2 months, it remains intact. So that was on gold. Um, Yeah, I'm not sure whether you want anything. You want me to you want me to check. Oops, you couldn't see how long that this is happening, or this is just. No, you could see, but my okay. Let me check again what's going on. That's good. Okay, I can see that you can see my. Uh, you could be able to see, but I wasn't. I don't know why. Never mind. Okay, let's move on. Uh, you were hoping, oh, you were hoping for a good reading. Of course, everyone was expecting that. Gold will drop. Well, it was a good call from you, Abdallah. Yeah, it was a good. It was a good. It was a good thinking because yeah. Anyway the markets were pricing in gold. The price they were pricing in advance a good reading. So anything other than the good reading cause some, how we call it, some disappointment or overbought conditions, and we have this correction. Euro dollar, yes, sure. Euro dollar, keep an eye actually. I'm stating some key support and resistance levels, so it's good to write them down, okay? Because uh, this might trigger whether each of these assets that we are currently covering is entering a negative outlook or a positive outlook, and so on and so forth. So euro dollar, of course, we've seen it. We've seen it bouncing on the strong dollar. I'm curious whether this continues. So this is a 15 minutes chart, 30 minutes chart, jump, extends. 121.72 has been reached, which, if I'm not mistaken, is my 20-day moving average. So recovered some losses from yesterday. This is a daily chart, by the way. So it retesting the 20-day moving average. So 121.70, put that down, because if it closed today below that level, then this suggests further bearish bias for euro dollar after we've seen it in a continuous decline since the mid of May. Okay, so 121.70 for the time being. Guys, let me just so just to don't try to explain why a dollar is getting weakened, even though we have good report. Okay, this was the immediate reaction. It's good to wait the markets to calm down a bit in order to see whether this direction has sustained or not. Is the fuzz of the data, is the noise of the data, but also because today we're gonna have Mr. Biden soonish. We're gonna have it. He's gonna speech about jobs. So that would be a very, very important event as well. Okay, because remember, we have massive stimulus, and the fact that is actually Biden offers to keep tax cuts, but on the other side is willing to have the corporate tax of 15%, is something that could it could affect the the dollar outlook, but nonetheless, it's all about stimulus. Okay, he's proposing 2.25 trillion infrastructure plan. You know that infrastructure plan means more jobs, more and more jobs. We might haven't seen that today. We have seen a good, strong, a big number below expectations, but a big number. But the fact that he announced further infrastructure package means more jobs, means that in the upcoming months, because of further infrastructure plans, along with the fact that that the markets are back into they are reopened, okay, along with higher payments, this gives incentive to workers to actually this gives incentive to attract workers is the infrastructure um, um, suggest more jobs. The reopening, the reopening of the economy also support this scenario. The fact that we have a rising, increasing the average hourly wages, so higher payments, also is an intensive for people to work, to find a job, to have more workers into the US. So all these overall put the US labor market in a good place, okay, in a good place at least for the months ahead. So yeah, you need to take care of Mr. Biden tonight. He's gonna discuss about jobs. He will probably repeat his 15% corporate tax as well. So we're gonna have the next event of the day. Actually, the focus for the day is on Mr. Biden. Is on Mr. Biden and the Republicans. Yeah, that was on Mr. Biden. We have discussed about gold. That's good. Okay. Pound update. Have we finished euro dollar? I'm confused right now. But what I can see is that the euro dollar over here is already struggling to overcome the 20-day moving average at 121.72. So it retested it after the release. Okay. It's also very close to the 200 exponential moving average. So it retested it, it closed below it, and is reversing into, as we have and is reversed in the last 13 minutes into the new hourly candle. Interesting. So that means that maybe this jump initially on the data is running out of steam. Okay, so we're gonna have a look. So if the asset turns back below 120.50, guys, okay, actually let's be precise. We'll put a little Fibonacci over here. So if it comes down to 121.40, then that could suggest a retest of the round 121 level, but not solely that. Okay, that could also turn that could also confirm the continuation of this downwards trajectory for euro dollar. So keep an eye on the reversal and on the breakout of 121.40, but more precisely the 121 floor over here for euro dollar. So let's move on. So a bit of a decision, struggling to break the 120.70. Okay, pound. Okay, so we have pound over here. So, so as everything else, actually, pound was a bit mixed prior to the data, losing some ground since yesterday. Due to the from the losing the ground against dollar since yesterday. So jumped on the open one on the open on the release. So we have. I will jump to the 30 minutes chart. This is even better. So we had this bullish cross of my fast moving average since the European Open today. They bullishly cross, suggesting rising pound. So since this morning, we've seen pound turning higher, okay, weaker against dollar, um, and actually this was yeah, this had to do with the expectations. So right now, with anticipation, right now, the fast moving average are still pointing upwards, suggesting that there is still some bullish bias intraday in this 30 minutes chart in the very short time frame for pound. So it is at 141.80. That brings as immediate resistance level the round 142 territory. Even though the asset looks a bit overbought, it's already above all moving average. The Bollingers extending high, are extending upwards and northwards, but is outside. It has opened and is moving outside the Bollinger Bands territory, something that suggests that it's already overbought. Um, so we might see a bit of a correction, but for the time being, that's not the case. Even if I zoom into the 15-minute chart, you can see that the rally continues. Momentum indicators are still, the fast moving average are still pointing upwards. A MACD pointing upwards. Stochastic still pointing upwards. Even though it is in the overbought territory, RSI is the same, 82, and it's keep rising. So pound has still the rally here hasn't look it doesn't look to run out of steam yet. So key level will be the round 142 to 142 area, round number. Okay, while a break above that could actually it brings. Okay, let me just put that on this little. Okay, so here we are. Next levels to be watched, next resistance levels are the 122 and the 122.10 is the 261 Fibonacci extension. Okay, so keep an eye on these levels. While a break of this zone, so you can see this, whoa, that's quite nice actually. Should put a note over here. Can you see that the 142 or 142.10 is actually an area that has been key, has held like a nice strong resistance zone since 70th of May. So a break of this zone, okay, brings back into our attention the 142.30 or even 142.40.50. Is that it? 50? Let me double check. 142.47 area, the high that we've seen last week. Okay, but only if it managed to extend above it. For the time being, it could retest that level because all the momentum indicators are suggesting further bullish bias. So that was on pound. Hopefully that helped you Who asked for it? It was Christine. Yeah. So apparently it didn't sell massively, dear Jonathan. But if for sure struggling, can you see the 15-minute chart? It's for sure struggling to extend further to the upside. Let's wait and see. We still have Biden, so this might be something that could cause some kind of a pricing in ahead of the event, even though the most important event was NFP. So yeah, keep keep an eye on 121.17. How does a strong dollar affect? Okay, a strong dollar affects every dollar crosses. That is a question from Michael. A strong dollar affects every dollar cross. It's the same stance for everything, right? A stronger dollar, a euro, or a weaker dollar, a weaker euro, sorry, affects all the euro crosses. They are correlated. We have pairs, right? So they depend on each other. Gold, we've seen gold. Let's see it again if you want to. So let's see, did it manage to overcome the 61%? So it broke, recovered more than 60% of yesterday's dip, keep extending higher, MACD extending, but, okay, that's important. That's quite interesting. Okay, I will stick to the 30 minutes chart. And you can see that the extended, gold extended above 50 and is retesting right now the 61.8 Fibonacci level, which one of the most important one is a very, very strong retracement level. But what is important is the fact that despite this rally, MACD persists at zero. So the signal line remains below zero more precisely. RSI flattened at 70, something that suggests that we might see consolidation from now onwards. Stochastic failed to actually just broke 80. The fast line of stochastic just crossed 80, but the slow one is quite flattened, also complying with the other two indicators that just suggest some consolidation, that we might see consolidation from now onwards. So let's wait and see. Yeah. Okay. Interesting. So, as I said, my dear Obiosa, gold outlook overall remains positive as long as we see a close today above the 20-day moving average, and more precisely above the 180 territory. Okay, recovering at least 50% of yesterday's losses. So we're still dollar Swiss. I have Swiss somewhere. I'm sure about it. Okay. Okay, dollar Swiss declined significantly. Is a it should also, yeah, similar with dollar yen. Anyway, they are safe haven current assets. So that explains the moving gold as well, but also the some safe haven flows, outflows actually more precisely. So dip from 90.50 down to 89, crossing the 90 territory, breaking the 50 and 200 moving average and the 1 hour chart, exponential moving average, bearish cross confirmed, actually in the latest hourly candle with vast moving average extending to the downside. MACD turned to zero. RSI is at 30 but consolidating. Stochastic crossed below 20 and is still pointing downwards, even though it's already very, very, very weak. But this, the momentum indicators and this this sharp decline of fast moving averages are suggesting that there is further selling pressure for dollar Swiss in the 30 minutes to an hour charts. There is some pressure still, but let's see, ATR at 0.010, while the hour 0.011. Next floor is at this rounding bottom over here, just 12 pips lower. Okay, that clashes with the ATR as well. 12 points pips lower. So this is the next floor for the dollar Swiss, which is aggressively lower, sharply lower, and still pointing, suggesting further bearish bias for the very, very short picture. Let's see okay. If that this is the immediate support level, if that breaks, then the next one is down to 89.40 territory. However, let's see the overall picture for dollar Swiss. So, okay, let's get rid of that. Okay, we have seen the asset that's similar to other currencies that we have seen, like similar to dollar CAD and euro dollar as well. We've seen it breaking the 20-day moving average yesterday and reversing nearly all the gains that we have seen yesterday. They were reversed today, coming back, pulling back below the 20-day moving average. But so the overall outlook remains to the neutral to negative. So you can see that it remains like in a downwards trend. Actually, I will put some a regression channel over here. No, that's not working properly. I would like to have linear and standard deviation as well. Perfect. So, okay. Yeah, pretty much the same. Okay, perfect. So, yeah, remains in a downwards pressure, but it managed the whole May to sustain this 89 floor. And it actually, what's interesting is the fact that despite that it hasn't managed to like recover significant losses since the this peak over here at 0.94, 95, nearly 95. Even though it hasn't recovered, it managed to sustain this floor for more than a month. But what is quite interesting from technical side is the continuous parabolic SAR below the price, something that it tends to be a bullish signal. But as long as we don't see further indicators suggesting signaling the same scenario, then the asset remains under pressure, while for the time being the daily picture remains neutral with key resistance at this double top over here, 90.50, and key support other than the 20-day moving average, of course, at the floor that we have seen at 89.45 to 89.30. Okay, so neutral dollar Swiss overall intraday under pressure, still further steam to the downside apparently, according to the indicators. A lot of you are interested in gold. Obviously, that's reasonable. Uh, okay. Uh, Euro dollar. We've seen euro dollar, and euro dollar actually managed to move above the 90, 121, 121.70 territory. But let's see whether this will sustain or not. MACD still positive, but signal below it. RSI still flattened. Stochastic doesn't look promising either. And nonetheless remains below its 20-day moving average after all. So gold, 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 euro. The ghetto, you're saying that euro dollar up. Yes, it has jumped. Did. But, okay, let me just check this out. Remains below this 20 period, 50 period moving average. Negative 4-hour chart as well. I can't tell, dear Ghetto, and cannot really reply whether it's bullish or bearish, but yeah, just stay with what I have already stated in regards to the technicals and fundamentals. Actually, interestingly, Bollingers in the daily chart for euro have flattened, something that suggests that it might have entered some kind of a consolidation or a range ahead of the new week, of the upcoming week. Uh, Michael, there is not a confirmed correlation in regards to anything that has to do with the digital assets. So, yeah. Hello, hello. Yeah, yeah. Down. So down USA 30 and USA 100. So Nasdaq was one of the heavy tech. Actually, Nasdaq had plunged yesterday, recovered nearly 70% of the losses so far today. So rising since this morning and keep extending higher. Fast moving average are pointing upwards. Parabolic are well below the price, something that suggests further bullish bias for the 1 hour chart. RSI cross 50, stochastic already in the overbought territory, while MACD remains negative. So, yeah, mixed momentum indicators. However, as long as the fast moving average I keep pointing upside, suggests that the rally hasn't run out of steam yet. With this bringing it back into our attention, let me check the 13,690 territory. Let me check something over here. So Fibonacci extension. So right now, broken the 200 Fibonacci extension, and the very next Fibonacci extension comes at 13,710, which coincides with yesterday's, actually not yesterday's, with Tuesday's, Monday's highs. Okay. So resistance levels for Nasdaq. So say 13,700, 13,710, the next key resistance level intraday, immediate resistance level for USA 100. In the daily time frame, however, with this rebound from the 20 moving average, sustains the Nasdaq into a neutral sideways movement since May 24th. So since then, the asset is like moving sideways, unable to extend the rally that we've seen in May. So yeah, overall it remains neutral. Dow Jones, USA 30 more precisely. So we have the 1 hour chart, we have the bullish cross of the fast moving average prior the data. So this continued so far with the moving average is pointing further to the upside. MACD is neutral, RSI flatten, suggesting that this rally might run out of steam already because, yeah, MACD is flat, RSI is flat, stochastic pointing to 80, but it's like pointing to the right hand side as well, something that suggests that it might run out of steam already. So let me go down to the 30 minutes chart. Yeah, a fast moving average are already started pointing to the right hand side, so consolidation might follow. So this rally might run out of steam already, but yeah, already broken Tuesdays, Wednesdays, and Tuesdays highs. So that leaves us with the next resistance area at the 34,785 territory. Okay, to 90 more precisely. Okay. Yeah. So Dow Jones looks to run out of steam for the 1 hour chart, while daily remains to within a rising triangle, flattened though, but unable to break the 2 months resistance area and the 34,800 territory. So consolidating very, very small candlesticks, daily candlesticks, suggest the low volumes into this instrument, but overall remains into a long upwards trajectory. However, a break outside and above this ascending triangle, ascending triangle could brings fresh record highs for USA 30, since overall picture remains positive with MACD being positive, RSI extending higher, all moving average are pointing further to the upside, remains within an upwards trend since October 2020. So yeah, overall positive. Okay, good day, good day. Hi everyone. No, I do. That's why I'm an analyst here. Okay. Pound O's analysis, please. Pound O's. Okay, that was the very last question. I will call for more questions. Now is the time to put that everything on, guys. Pound O's, which I don't have over here. I will bring that up right now. Okay, pound Aussie dollar broken that immediate support level and turn lower, extended Bollingers to the downside, bearish cross from fast moving average, but mixed momentum indicators apparently. So what I mean by that, as you can see, MACD remains positive, okay? Stochastic indeed it planked lower below 50, but you can see that it's not pointing to further decline anymore. It's pointing like it's ready to flatten or even to rebound away from 30. So uh, this MACD positive, RSI stalled at 38, suggests that this suggests that this might run out of steam already, but okay, keep extending lower in the 30 minutes chart. Next support is really, really close to our next support at 132.46, but stochastic already crossed overbought. And let me double check something, guys. Let me check. Not point, not 25. So this is a move. Let's measure. ATR is at no point, not 25, which has already covered. Yeah. So okay. Okay, for the time being. Okay, so now pound Aussie break this broken this immediate support level, okay, in this 1 hour chart, and this could actually attract more selling pressure, uh, since we have still, even though we have some kind of a mixed momentum momentum according to our indicators over here. However, the stochastic is still aggressively pointing to the downside, suggesting that there is further selling pressure. So stochastic point to the downside. Fast moving averages are also pointing to the downside after this bearish cross. So we have some this implies that we might see further dip in the very, very short time frame, but the next support level for the asset is at, let me just, it's quite narrow break over here. It's already broken. No. So the next support, let's see, is pretty much at the 50% Fibonacci level, which coincides with this resistance that we have seen on Tuesday. So next support level is around 30 pips, 35 pips lower, which this is bigger than what the ATR is stating. But we have a negative outlook for the near-term picture for pound Aussie. Overall, however, I will shift to the daily chart. This is the vice versa scenario. We have seen the pound Aussie extending higher, being in an upwards trajectory for the whole May, with a bullish cross, a golden cross actually, of 250-day moving average since last week. The 20-day moving average is providing a very, very nice support to the asset. The asset, despite the decline today, managed to sustain the highs that we have seen for the last actually 1, 2, 3, 4, 5, 6, 7 months. So it sustains its 7 months gains. So overall, a very, very a bullish outlook for pound Oz in the daily picture, as long as we don't see a turn below the 180, 160 territory, or the the 0.82 level. Okay, so bullish outlook overall. Intraday, some decline after the data on the US Open, more precisely, which doesn't look to run out of steam yet. So next support area around 28 pips lower. We have covered gold, guys. Why you keep asking about gold? Okay. So, yeah, it's struggling actually to break this 61.8 Fibonacci level, this key strong resistance area since yesterday's dip. So this is the key level that you will need to monitor from now onwards for the rest of the day, because a break of it could open the doors to 1900s, while a failure to break that level and a reversal down to 1880 could suggest the reversal, the pullback of gold back to the mid of 1800s territory. So yeah. Let me double check what's going on in Facebook. Uh, do, 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 do. So, guys, I've seen a lot of comments, but I will call, because they're nothing to do with analysis, I will call my colleagues to help you with it. Okay? So, no questions for analysis from Facebook followers. That's a shame. That's fine. I will just do a quick review of the newsfeed to check whether something else happened. So, and I will make a quick briefing of the day, guys, because we're already more than an hour live. So okay, we have okay, excellent. So let's move on. Since there are no further questions, okay, let's do a quick briefing. So we have seen, guys. I will bring dollar cat at the background. Dollar, sorry, or dollar cat actually, since we have the Canadian dollar also out. So we had an overall mixed results from the NFP, even though the fact that the average hourly earnings and the unemployment expectations that was a positive in regards to for the labor market, but we had a shortfall in the payrolls and a downwards revision in the April work week and hours work data. So that is what that is something that that has weighted on the dollar for the time being. This the markets apparently focus on the shortfall in payrolls, on the undershoot of the expectations. But as I already mentioned, the fact that we have seen wages rising, the fact that we have seen more people, the fact that we have seen unemployment falling and the payments rising, this could this is good for the U.S. economy because it could attract more and more workers in the near future. And this might be something that Fed could be based on for taking its decision in regards to tapering. Actually, FOMC is in a blackout for 2 weeks. So we won't hear anything about Fed or policymakers, any speech, any comments for the next 2 weeks. If I'm not mistaken, the FOMC meeting is on the 16th of June, but the FOMC, but there will be another FOMC meeting on the in the end of July. But okay, we have that's later on. But the very next one, it will be 60th of June. So based on the fact that the jobs was good or good enough today, even though the markets reacted on the opposite direction on the midst of payrolls, but it was an overall good jobs report. Sorry. Uh, this is something that clearly supports the recovery story that we keep seeing from other data releases as well. But there is still a lot of risk, a lot of limit. There is a lot of risk, and there is a lot of how can I say that? There is still limited um, limited odds or limit. There is a lot of concerns or a lot of uncertainty. This is the word I was looking. I was trying to. There's a lot of uncertainty on whether the Fed will remain more cautious and continue being a bit mindful, so it will remain actually constant, or whether it will indeed follow other central banks like Bank of Canada um, and to proceed in some kind of a tapering, or whether it will start at least talking about tapering. So that's pretty much from me. I will scan a bit to see whether I left something, I missed something, but yeah. So overall, what we have overall um, we have seen dollar gaining, dollar actually sorry not gaining so dollar drifting and moving moving lower against major all the other major currencies. So dollar for the time being, we could claim that is the weakest out of the major currencies, while Aussie and in general the commodity correlated currencies like Aussie, New Zealand, as I can see, pound, are the biggest movers, the stronger currencies for the day, while dollar and CAD are the weakest ones after the job data releases from both countries. So dollar weak for the time being, Canadian dollar weak for the time being, Aussie, New Zealand and pound strong, the strongest at least. In regards to in the stock market, we have S&P, Nasdaq, and USA, so USA 30, USA 100, USA 500 to the upside. Gold also, as we have already seen, to the upside, extending higher on the lower dollar and the lower yields as well. We haven't seen oil. I will quickly show it and finish with the oil. So we have seen oil getting back to the 69 level, 69 60, 59.58, the high of the day, so extending gains. That is actually the highest, as I'm reading right now, since October 2018. Anyway, we have seen that there is a continuous rising prices on oil. But in regards to the oil, something that you should take care for the week ahead actually is uh, any any um, any reports in regards to the nuclear deal between US and Iran. This is something that could boost oil prices even higher than the 69 level that is right now. I'm not quite sure whether we have a date of a particular date for a meeting next week. But anyway, the talks are ongoing, so keep an eye on any comments, any news from that perspective, from that side, from Vienna talks in regards to a deal. So, and in regards to anything that has to do with the energy, with the supply and demand in oil markets. This deal will definitely boost further to the upside oil. So keep an eye next week on oil, on the Vienna talks. Also, the key event next week will be the ECB as well. We have the ECB rate decision next week. So this will be, along with the G7 meeting, three of the key events to be watched next week. So that is from me, guys. I'm not sure whether I missed something, but if I did, anyway, we'll be here next week as well, and we'll be here to help you as always with anything needed with our daily analysis written and our videos in social media, Instagram, YouTube, and Facebook. So we are here. You can ask anything you want anytime within the social media. We'll try to reply as soon as possible. So thank you very much for attending this live. Take care ahead of Biden, even though it's quite late. Have a great weekend ahead, and see you again next week. Thank you. Bye bye.